Good morning, everyone. I think people can hear me, not see me. So I'm doing a free little chart watching session today. Just putting this out on YouTube publicly. I don't typically trade on Fridays, but wanted to see what the market was looking like today. Yo, Tony, what happened? What'd you do, man? And let me know if y'all can hear me. I think y'all can hear me, but let me know if y'all can hear me, and I'll make the screen a little bigger. A little bigger. What the heck? There we go. So I'm hopping on a little late today. I just figured I'd do a live session on YouTube because I typically don't do these. I typically go live in the lab for the community, but I wanted to do something free. I had a lot of people join the Discord on the free chat this past week. I think I went viral on Threads. I posted a video of I posted a video and it got a lot of reactions. I think like 20,000 views and stuff like that. And I think that's where a lot of people, the new people coming in, if you see in the Discord, I think that's where they're coming from. Um, but yeah, so the big thing here is if I was on, I would have been on closer to 7 or 8. You guys know the drill, but um really looking at a couple of things and I'll actually replay stuff too, so we can kind of talk about it in post. But I already hit my goal for the week. I ended up taking a trade earlier on GBP. The one that I posted in the chat. I didn't post the actual like profits, but I posted the executions. So I wasn't really pressed to trade. I'm not really pressed to trade on Fridays either. But a couple of things that I want to note here too is everything starts with dollar, right? So we do this every week, right? So what happened coming into the week on dollar? Dang, we actually were. Oh, we took our goal, right? So I tell my students this all the time that when my goal is hit for the week, personally, I'm usually done trading, so I stop caring about the markets at all. So if my goal is hit on Tuesday, then I'm usually done, and I don't even think about the markets until the next week, and so or till the Saturday call. And literally, when I do that Saturday call, like I have not looked at the markets since my last trade. So weekly projections here. Our goal for the week was low key this low at 97.113. So we smashed that. That was basically caught out in the call. And then I said the low end of this volume imbalance here, which we tapped, but did not take out. We're right there. We're actually getting relative equal lows. We got about 2 hours left in the session today for currencies. So relative equal lows right there. So I want to see the market come back down and tap those. I think it's very obvious. Jump into the 15-minute time frame. Uh, that midpoint of that Asian range was respected pretty well. Um, like pretty much down to the dot. Just shy of that. Actually, pretty much on the dot. Some market respected that. So I would assume the market wants to come back down to the low of the day, the yesterday's low, like this level right here. And take that. That's on dollar. So again, dollar analysis comes first. Obviously, we don't trade dollar, but it gives us the idea of what we want to see in the market. So we know the opposite is going to happen on euro, right? And again, I apologize for not being on here sooner. I'm personally not going to push the button today because I hate feeling rushed when I hop into trades. Um, and if I was on at 7 o'clock, I actually planned to do a one-on-one with my student at 7, and it just kind of completely fell apart. So our goal for the week was this level here. We called this out on the weekend call. We wanted to see the market run up and take that, and it actually did yesterday. But now it's trading past that, so which is good. Again, usually when my targets hit the level for the week, again, I call it a week, and I'm only trying to find one or two good trade setups in that run. I hardly swing trade. The most I do, I might hold overnight, you know, um, through a London session, but I hardly really swing trade for multiple days. Um, but coming into today, I'm actually going to jump to the Euro futures because it has my charts on here. There we go. All right, so first things first, Asian range. We actually had a very narrow sweep of the Asian range. We took out the low right there. And then it was a really clean setup for a London or New York session continuation that we're actually sitting right now. Again, Fridays, I don't typically trade, so I'm not pushing the button, but we have all the elements here to a good trade setup. We ran through, retested. This order block here is 15-minute order block right there. This could have served as your entry right there, or yeah, or you could have went long in here. Right there after 7 o'clock. Again, I'm not going to break down everything in full with the strategy because we are like publicly live on YouTube, but Tony, you should know by now how this plays out and what I'm looking for here. So this would have been my first initial entry right there. We could have respected that level here and came back for a stacked entry. The market did come back down there, pretty much tapped consequent encroachment on that gap on the just shy of that on the nose actually. Yeah, it ran right through that level. Came back to our initial entry or where we would have had our initial entry and traded away from that. Again, hindsight is obviously 100%. Like nobody ever gets this wrong in hindsight, but for the people that are watching this that are our students, our mentorship students, then you guys are going to see this pretty cleanly. I came back up here just shy of tapped the second standard deviation level too, so that's a good area. It actually was a really clean setup. If this was any other day, or I got to the terminal quicker, we would have been great. Trading underneath the midnight open right there. It's pretty clean. It's really clean. And honestly would have netted about 80 pips on this. Is if I'm reading that right. 1743 to yeah. It's actually a really clean setup. Let me look at NASDAQ really quickly because it was moving. I noted that we didn't get a clean power 3 setup here. Again, we wanted to see Asian lows taken, but we didn't get that in this particular scenario. So what did we get? Well, we had a retest of the 50% level. The market came back down here under that midnight open. Again, if we could build the candle and kind of understand what a candle looks like, we know that power of 3, that midnight open in a bullish market should act as a level of support or resistance. So I'll show you guys right here. It's one of my other favorite indicators that I use. So I really only use 2 indicators, quote unquote, but it's really just so I don't have to mark my charts up. They're not like indicators per se. Get rid of this. It's actually really clean. This one, I've never used this one before, but this one's kind of, get rid of that. This isn't it either. Sorry. Um, Power of 3. PO3. Trying to remember which one it was. I haven't used it in a while. Nah, that's not it. Whatever. Either way, you can see that the opening for the day, get rid of this, it's not gonna help. The opening for the day was down here. And so get rid of this. And then let me add the other one back. ICT, everything. Wow. The reason I use this one is just because it marks on my Asian range, my standard deviation levels. So it gives me something to shoot for each day for targets. But we came back down here, just like this setup we've been getting all week, really. I mean, this has been kind of clean, actually, that retesting of the middle 50% range of Asia. Again, when it comes to power 3, ideally I'm looking for a very clean setup where it takes out the low of the day coming into London. But if it doesn't give me that, then I want to see a retest at least of the Asian range, and I want to see the 50% level of the Asian range to hold. If it breaks, then we're probably not going to get a continuation of whatever we had in London. So that was perfect. So if I was looking for initial entries, again, you could have did a couple things. Chopping up, my computer's freezing up for a second. Could have waited for a break in market structure. You could have waited for the inversion of that fair value gap right there. There's a lot of things you could have did. We traded back into this. We just broke structure here and took out this fair value gap like that. So that could have been an entry for you right there in the last few minutes. This would have been the safest one, the cleanest one. Again, just wasn't on earlier. So yeah, so I use a combination. So I don't even want to call it ICT because when I first started trading, I learned this thing called the market maker method. And so essentially the market maker method is there's a lot of the same concepts as ICT. Some people think that he stole his stuff from ICT. I don't know. It doesn't matter to me. But I learned about power 3 accumulation, manipulation, distribution like a decade ago. And some of that stuff is there's a lot of different people with a lot of overlapping ideas on the market. And so like Wyckoff has this like accumulation, manipulation, distribution stuff. So it's the same things, really. I mean, like a lot of ICT stuff, other people use it, have it, have regurgitated it. He's not the only person to talk about a lot of this stuff. It's just that he's the most famous because he's the most controversial and he's the newest guy. Well, he's been around for a while, but he's the newest guy, public guru trader. Like a decade ago, it was like Forever and Profit with Q Banks and all them. Those were like the guys that were like the number one traders, and everybody wanted to trade like them and drive a Lamborghini and stuff. And so it's long story short, there's some of his concepts I use, but there's a lot of stuff that I don't use, and there's other stuff that I use from just other people, and it's kind of at this point my own strategy. But a lot of it has to do with concepts that he also uses. So it's just there's nothing new under the sun when it comes to trading. Everything is like regurgitated. Everything is regurgitated. So yeah, so I mean that's honestly what I would be looking for if I was trading today, if I was pushing the button. The other things to keep in note, and one of the reasons that I don't trade on Fridays is because we technically want to see a trading back into the range on Friday. We usually want to see a counter trend day. And the fact that we're not getting that is kind of scary for me to want to push the button on. Usually the market is going to form a low for the week or high for the week, depending on the bias on Fridays, and it's going to trade away from that. So the fact that we're continuing on with our daily trend here is not it's not the best scenario to push the button because the market's not doing what we expected to do. I was talking with one of my students yesterday that we only really engage with the market if it does what we want it to do. Like we're not just moving it. We're not hopping in price and trades just because it's moving. Um, yeah, this was a really clean setup. If I was looking to exit, like if I was looking to take this entry here, my exit would probably be the high of the day, just because it's Friday, and I don't think we're gonna get. It's already 10 o'clock. It's after 10 o'clock. So if we did get an extension on this, then most likely we probably would not get too much higher than the high of the day. Um, but I mean, if you were here on time, and I know somebody did, I don't know. Hopefully, somebody in the group caught this. But if you were here on time, then you would have caught this initial trade, at least from here to there. That's about that's about 28. It's about 30 points right there. Or this initial one, which was about what 71.17. It's about 40 points, right? 16 to about 40 points there on that initial trade. So there was definitely some good opportunities to to take on currencies. Bro, my computer's bugging out. Sorry guys. I don't know if you guys are noticing any lag. Yeah, 100%, man. Like it's just there's a lot in this industry that's been repurposed and reshared. Um, it's nothing's new. It's like everybody. I'll say ICT has some stuff that's different for sure. Like I never realized the fair value gap before I started looking at his stuff. Like I obviously got that concept from him, but a lot of the stuff like is regurgitated, breaking the structure, accumulation, manipulation, distribution, highs and lows of the day, the session, the week, like liquidity. Like these are not new concepts. He didn't invent these things, right? So yeah, but Tony, I gotta go back. What happened, man? I'm looking at these comments. He said this guy's getting ridiculous, ridiculous, and refused to follow the rules. I'm taking it. Just yeah. I mean, Tony, man, the one thing that I told you is gonna help, man, is if you're trading with these accounts, like That was weird. Can everybody still hear me? That was weird. I don't know. I gotta talk to somebody about my Wi-Fi, man. And I think it's either my Wi-Fi or it's StreamYard, the service. This thing crashes at least once a week. And I don't like it. So drop a one in the comment if you guys are there. I'm like, yo, like what the heck? I mean, Kaden, you use StreamYard for the other trading house stuff. Does that ever crash on you? Because a lot of times it crashes on me. I don't know what's going on. But anyway, so if I'm looking at NASDAQ, let's go back to NASDAQ. Getting a lot of wicks off of this level here. Let's see what level this is. Pow. That second standard deviation level. So, I mean, honestly, if I was taking a trade, my targets today would have been the high of the day. This would have been first target. My second target would have been second standard deviation level. So this would have been a run of about 80 points, which is not terrible for a Friday. Maybe you could have found a 1 minute entry down here, somewhere in there for a little bit more. But the fact that this market is starting to break structure over this high, which lines up with that standard deviation level, not a great sign for bullishness. So again, Fridays, we talk about this all the time in the chat, but Fridays are usually your counter trend days. And so if you're trading a bullish market, you should expect your counter trend days to be like, if your week is bullish, you should be expecting a bearish Friday or a bearish, at least a bearish New York session where we reject from that high. And that's one of the reasons that I don't typically trade on Fridays, is because I have a hard time personally trading with the idea that it could be a counter trend setup and I should be expecting that. But at the same time, you're still pretty much trading the high of the day or the low of the the high of the week or low of the week. So against that. So I want to see how the market reacts to this fair value gap right there. If I was still in long positions and I didn't get out right here, I don't want to see how the market was reacting to this fair value gap here. Right in here, the secondary one right there. Are we respecting consequent encroachment? Are we going higher? Are we respecting these levels or not? Then I jump down to the 1 minute time frame. And then see that we did break structure. So at this point, I probably would have cut out any long positions just in case. But a lot of times, what happens is this is a fake out just to trade into a higher time frame fair value gap. So you might break structure on the 1 minute, but the 5 minute is really just trading back into here. So it really just kind of depends on what your day is like, and how comfortable you are just taking profit here or holding through a potential retrace if you're going to go long. Or if you're going to stay long. So a lot of times what happens is in that first run, especially on NASDAQ, because everybody wants to trade the 1 minute time frame, is that it'll break structure on the 1 minute, trade back into a higher time frame fair value gap there, and then it'll keep going up, and you'll be like, oh, what the heck, I should have held it, right? But it's really just, you have to pay attention to multiple different time frames at once and manage those things, and then see where we're at in the bigger picture. So again, because I get a lot of conflicting messages mentally on Fridays, I just typically don't trade them. But even here, this is a 15-minute trading. We're trading back into a 15-minute breaker setup right here. So this could, in theory, still technically rise. And so if I'm coming into a Friday and I'm thinking my natural inclination is I want to see the market drop for the day, it kind of conflicts. And once I get mixed messages mentally, it just kind of messes me up. So I don't even want to take the trade that day. So you hardly will ever see me press the button on Fridays. Trading into that order block right there, the 30-minute. Notice how we keep coming back down to this initial level, this initial entry. This actually was, I'm actually kind of mad that I didn't take this. This is a really clean, this is a really clean day. I'm kind of mad that I wasn't online because I probably would have been able to catch this from right there. Either there or there. So here's what it is. Once you get okay with the idea of not taking trades, then that's what it is. Like once you get in the habit of not taking trades, and not feeling pressure that you missed out on a trade, your trading opens up. So Caden says, how many trades do you take a week? So I typically take 1 to 2 trades a week. I don't even take that many, to be honest with you. And maybe some people might say I undertrade, but my main trading days, I'm usually gonna have 3 days a week that I'm looking to trade in a week. And I just kind of do the math mentally, right? So like I'll say usually one of those days is a winner. At least 2 of those days are usually a winner. So I might win 2, lose 1 day. And so if you think about it, if I win 2 and lose 1, then I'm up probably 1 day, right? Net profit on the week. So usually what happens is if I get my 1 day that I win, I usually call it a week, right? And so I just focus on that. I'm not trying to be on the charts all day, right? I'm trying to get in, get my kills, and get out, right? I'm way past the idea of just wanting to stare at the markets all day, right? And I know the longer you stare at the markets, especially when you don't see a setup, the more likely it is that you're actually going to see a setup, or you're going to want to take something to press the button. So it's kind of like hypnotizes you into to wanting to take a trade. So for me, I don't like staring at the charts for long periods of time. I like coming in, marking out my levels, saying if this hits here, then I execute. If not, then I go about my day. Like it just becomes, I think when trading becomes a job to you, that's when you start like seeing a lot more success instead of this thing that's it's gonna change your life and it's gonna do like just focus on just coming and executing at your job. Like you get a paycheck from your job every day, but you don't never sit up here and be like, my job is changing my life, right? Like it's just money, right? It's just an execution. It's just a job at the end of the day. So it's the same thing with trading. I try to take away a lot of that stuff, and I obviously still have big days, right? Like, big days per the account. Usually, my usual trades are somewhere in the 2 to 3 grand a trade, a position, somewhere in there. Like sometimes it's a little bit more, like say 3 to 4, but somewhere that between that 2,500 to 3 grand in a position is what I'm usually getting out of a trade. Just with the account size and where I'm at right now. So that's personal, and then that doesn't really count the fundeds either. So it's really about capital, how much you have. But for me, that's cool. That's all I really need. I don't need to sit up here and try and be greedy and overtrade because I end up usually giving it back. So going back to dollar, I noticed that did we take that low? Technically, we did take the low here, but if you look at the daily time frame, we didn't. So I'm really just I'm noticing that these wicks, we could potentially go back down there again. So I'm just keeping an eye on that, but then also noting that it is Friday, right? So same thing with here, where it looks like we're breaking structure in the 5-minute time frame. We just inverted that fair value gap right there. So potentially this is probably the reason. This could be a reason that we don't go higher. Again, Friday trading is weird. And I don't even want to be on the charts this day, and yeah, British pound is going way lower. British pound is actually a very clean power 3 in the opposite direction. It's interesting. We do have these relative equal highs here at the high of the day. Technically, we did tap those. But yeah, right now the price is sitting in the middle of the range. And the worst place to kind of see if your bias is right or not for the day is when price trades back to that 50% level or that middle of the range. It's really hard to tell what the market's going to want to do next. We have some levels of liquidity to the high. We have some levels of liquidity to the low. I can really see it doing both. Again, when I say like whenever I have conflicting ideas of what the day should be like versus my bias, what I'm seeing on the charts, kind of like how I'm seeing it now. Like Friday should be a counter trend day, but we came in and we were making highs for the week. Um, or if I come into a session, right, and I say like we're trading in the middle of the range, um, I see two areas of liquidity that we could hit. It's not high probability setups, right? Um, so we don't really want to take those trades. So I don't want to be in the market at that time. But today we did come up and sweep yesterday's high too in the last hour. So there's a lot here that could set itself up for a counter trend for the week, like us trading and going back lower. Um, again, if I was coming into today without having to see a chart, I would want to see a bearish day because it's Friday. But then this is giving me bullishness again. So just whatever your game plan is for a particular day, if you stick to it, see it. If you don't see it, don't press the button. So my trading day is divided into windows. So I have my windows are 7 to 10 for entries, right? And so if I don't see an entry on currencies from 7 to 10, then I'm out and I'm not looking to see I'm not looking to take anything. If I'm not seeing anything by then it's like there's no point in me being here. 11 o'clock is usually like the cutoff time for me altogether. If there's news, like 10 a.m. news, um, I usually will extend that window from 7 to 10 to 7 to 11. But yeah, for indices though, I'm at market open at 9:30 and I'm just watching to see what's going on there. I don't really like trading pre-market typically. Um, so and that's like anything from like 7 to 9:30 pretty much. I don't trade that in that market just because it's not as heavy. But 8:30, usually 9 o'clock, I'll hop on the charts and start looking for entries closer to 10, just to see what the market's like, see if my ideas are panning out, and things like that. If I don't have an idea for anything, then I just stay out. Let me go back to dollar. Yeah, we're finding some level of support here. I just don't trust that we're not going to come back down here. It might not be today, but I feel like we're going to come back down. We did run these lows. When I zoom in, you can see it. We did run these lows technically. So if there was some liquidity here, we did take that for the day. I could see a world where we trade back up here and take that high. It's pretty flat, even highs, relative highs. So I can see the market doing that for sure. Yeah. This is starting to break structure here. We fully inverted that fair value gap. Wouldn't be surprised if we come back down to the low of the day here too. This is a euro. I wouldn't be surprised if we run back down to the low of the day. But again, I'm not really pressed about anything. Let's look at some other stuff. What else do y'all want to see? Let me look at gold. See what gold's doing. Yeah, I don't like everything here is crashing. Like every pair that has USD is crashing right now. So I don't like my idea for bullishness on euro is probably off. But pound is making higher highs. Yeah, this is just not, it's not a great, oh, it's not, it's making lows. There we go. Yeah, there you go. A lot of times I'll look at the currencies, the ones that have similar relationships to each other to see what's going on here. So if you look at British pound, we ran these highs in London, came back up here one more time in New York, and pretty much been crashing. Whereas Euro is doing the opposite. Euro was going higher. Oops. Euro USD was just making highs. It was just taking highs out. Um, so whenever I have currencies that like this that are doing the opposite, I always look at what the relationship is to dollar, and both of these should be moving opposite. So if one is moving opposite, then that's most likely the wrong one. And as you can see here, uh, this is most likely flowing in a relationship with Euro. So that London session, that was going higher. This is just a give. That's probably just a fake out to go lower. And then I guess Tony, if you're still on here, notes for your study. Look at how the market is invalidating these fair value gaps and so letting us know that we're no longer interested in going lower. So there's that. And then if you guys look, you can see things are going lower, disrespecting this fair value gap as well too. But yeah, max holding time, just to answer, I guess, fully answer your question. Max holding time is going to be usually a day. I'm sorry, a day, a few hours from 7 to noon. If anywhere from 7 to noon on currencies, or 10, 9:30, 10ish to noon on indices. But if I don't see an entry by usually 10 or 11, depending on the day, then I'm not really looking to trade anything. And I just know from like running thousands, like at this point, I've probably taken, I don't even want to know how many trades I've taken in my life. Probably well over 5 or 10,000 trades. And um, I just noticed that the markets tend to, if the setup isn't there by a certain time, it usually doesn't present. And if it does, every once in a while it's late or early, right? It doesn't matter. So at this point, man, I'm really looking. We really had to break a structure here on the 15-minute time frame. Rallied up, broke it, took it, retested this gap here. This is now an inverted fair value gap. So the market's really telling us that this thing wants to crash and go down. And it's flowing in line with the other currencies that it should be, like gold and pound, right? They're both tanking now. Again, if I was on here earlier, I probably would have had a little bit more thorough of a market check down, and went through all of the assets that I usually look at. And usually I have all of them up because I want to see what the market does. So now that we know probably that this market is going to tank for the rest of the day, at least running liquidity there, fair value gap here on pound, trading back into this order block here. You can kind of denote this stuff. Order block at the 9:30 open right there. It's algorithmic stuff. You could just denote this trade and kind of just, if not trade, this outline price and where you think it's going to run to. My guess is we are going lower. That zone right there, this pivot point, this standard deviation level is lined up with these relative equal lows down here too. So not only there's liquidity there, there's a standard deviation level there. I wouldn't be surprised if we came back down and took this low right there. So again, your initial, I mean, I guess technically, if I was on at 7 a.m., my initial trade would have been right on euro, like for that long. But if you ever need to switch your bias midday, um, you should want to frame out things that you can use and kind of ideologies, kind of like hard lines in the sand that you could use. So this is secondary fair value gap right there. This could have been used as a short entry, but I would love to see the market run through and take these lows here at 1.307. This is British pound, GBP USD. I think, again, had I looked at everything this morning, which is my usual check downs, I usually trade pound, euro, look at gold, and I have Nasdaq open, and then obviously dollar as the uh, backing, or as the pair that you use to kind of make sure that your stuff is good, your bias is good. If I'd have noticed that euro was making higher highs over this high, but then pound wasn't, that's divergence. There's a concept called SMT divergence, basically where one our asset's going to make higher highs, while the other one's going to either sweep or fail to make higher highs. It's going to let you know right then and there what the trend might be for the day. So there's a lot of things I'm looking at when I take a trade, and I'm usually just trying to trade the asset that flows in line with the best of all these ideologies together. And sometimes I get it right, sometimes I get it wrong. I try to maximize those wins and obviously minimize those gains. Said I'm on paper trading fucking gold up. I see it. I see you, man. I see you. Have a good weekend, brother. All right. Yeah, all right, man. See you. Hit y'all in the chat next week for sure. But yeah, I'll stay on probably for the next few minutes. Again, I want to see gold. I'm sorry, gold. I want to see pound take this low. It's kind of level that I think it's going to hit for the day. So we'll kind of outline that. And then NASDAQ, I don't even know what's going on with NASDAQ. What's going on with NASDAQ? Yeah, NASDAQ respected our fair value gap right there pretty cleanly. So my target, again, would be the high of the day. And I'd be out. So 2 entries here that you could have taken. You could have taken this one right here that was outlined. Or you could have been initially down here. Again, I wasn't online at this time, but you see this stuff play out over and over and over again. So yeah. So that's what I would be looking at. So pretty much two outlines of 2 potential trades you could have taken. This is the initial entry. Obviously, you have to respect the 50% level of that Asian range, or right there. Again, this is my target high of the day. It's about 50 points from there. It's about 80 points, almost 100 points from this low right there. So really, really a couple of cool opportunities there, even with euro bias maybe not necessarily playing out. I think one of the things that people don't do enough when they start trading is they paper trade, but they don't. A lot of times they don't just sit there and watch the market and like watch the market set up and just watch the market without taking trades or trying to put any type of pressure on themselves to get it right. And so one of the things that really helped me a lot when I first started trading was really just outlining where I thought price was going to go without even taking a trade. And I'll just sit here and denote based on logic. And once I had that, and once I started getting that right over and over again, it started helping me build faith in the concepts that I was using. So the problem is that when you take trades, even with demo trades, you're so focused on winning the trade, right? So you can prove to somebody that you would have made it if it was real money, or you could prove to somebody that you know what you're doing, your spouse, your significant other, your boys, look what I just did. But yeah, I think that's the biggest, one of the biggest changes that I had was just learning how to trade, learning how to watch and project price and tape read without having to worry about being right or wrong. So again, my target for the day is this high. I want to see it come back out and take that out. It might even run past that, but that's not what I'm focused on. I don't know. Is this an all-time high for Nasdaq? Are we hitting all-time highs on Nasdaq? Yeah, this is an all-time high. Dang. So imagine all those people that got in here for very cheap. That's why all this stuff is just it's all games, man. This is gonna be my shameless plug for my Discord. Talented 10th trading.com. Check it out. Join my free Discord. You guys can check and see how we do things on a regular basis. I have a call that I do a couple times a week where we go live in the markets, as well as full course we can learn how to do this yourself. So hopefully you guys found some value in this. I'm probably gonna stay on until one of these targets are taken. XB. Just shy of taking that low. It's a bummer. We'll see. Hassan, what's going on, Hassan? He said, do you take into account the mid-year rally, which is predicted to occur June, end of June to about July 9th? Yeah, yes and no. Yes and no. Like I look at some of those things, but for the most part, I mean, because I only can really trade what I see here. And so like a lot of times, expecting the market to do something based on like annual time of year can be kind of tricky, because in your head you're kind of telling yourself it needs to go up because it usually goes up this time of year. Or just because an analyst said that it should go up at this time of year. So it's kind of tricky. I do generally look at generally look at the market in terms of quarters, though, like every 3 months or 4 months, like a draw on liquidity for every 3 or 4 months. Um, but yeah, I mean, I'll take it into consideration for sure, but I don't typically like base all of my ideas off of it that it has to go up. So it came back into the zone, respected it. I really want to see the market come down and take these lows down here on pound, call it a day. On NASDAQ, take the highs. It is not doing that. It rejected. So this closes right here with this breaking structure. I'll probably just call it on NASDAQ. I hate when price gets to a target potentially, and it did take the standard deviation level there, which would have been the initial target. But the fact that it's really having a hard time breaking through that is not really good. So if I was in a trade and I didn't see the market come back up to this high, then I probably would have got out on that. But the initial trade would have been this for sure. I'll get some more positions on next week where we can actually see like stop management because in reality, I probably would have been stopped out in profit up here from this initial trade when the market came down and broke structure, especially when you have a big day already. I mean, we had 80 points locked up. So if I was in a trade from down here and the market broke structure right there, my stop would probably have been right there and I probably would have got taken out in profit. So, oops. A lot of times too, you'll see a big move down like this. It'll just completely run liquidity just to go the other way, just like it's almost grabbing your stop loss and then going the other way. It's just really just because a lot of people expect the market to take these highs, and so they're doing the same thing, putting their stop right there. That's okay. Like sometimes you're not going to hit your target. If I was in this trade from here to here and I saw my stop get taken after the market came up and ran there, I would have just been okay. I would have been okay with that, and I would have called it a day, and I would have made took home however much I would have taken home and called it at that point. So yeah, so that's what I would have did. But yeah. But it looks like we might be going the other way. Six B start looking like six B. I probably will call this today. But ideally, I would like to see I'd love to see the market come down and take this low. Just don't know if I have the patience to sit through it with no actual trade on. So, and then noting our levels too, we're below the midnight open, we're below 8:30, below our 9:30 open. All these things that we would look at in terms of time. Obviously, the market's going to open up like this. I wish I had that indicator working right because I lost it and I can't find it. But Power of Three says the market's opening up here at midnight. So it's coming up here. It's consolidating up or manipulating up and then distributing down. So in theory, today's candle looks like something like this. That's where we're currently sitting. Like this. So again, looking at the Power of Three in this. And then this one again, pound. If I was on earlier at 7 o'clock, and I keep saying this, but this is a very easy read, especially when comparing this to euro, right? You would have been able to, for me, what I would have probably taken this trade, but I also would have been cautious of the fact that it's Friday. So I might not have even, if I was even here at 7 o'clock, I might not have even taken this. But again, we know that Fridays are going to be our counter trend days. And we've been bullish all week, so we should be expecting a bearish Friday. So there's a chance that I might not have even taken this, even if I did see it. But it was a really good setup to take a New York continuation right there. But notice how this is our Asian high right here. And notice how the market just kept running higher and higher and higher. But then when we go to pound was really just took these highs and it kept wicking off of that. That's called SMT divergence. It's like smart money trading divergence, or you can just call it divergence. But essentially, it happens when two correlated pairs are not are moving in opposite directions. So like two pairs that should be moving in the same direction are not. So whenever you see, and this can be on NASDAQ and ES, this could be on Euro and Pound, when you see one of them just making higher highs like that, and the other one is failing to really take out those highs. Like this one bet failed to get above Asia in two different sessions. This is London right here. And this is New York right here. Right. That 7 o'clock window is right here. So we came up here, ran this high again, and couldn't really close above it. But meanwhile, Euro is going higher and higher and higher. That's letting you know right then and there that the market is preparing itself to go lower. So again, if I probably noticed that coming into the session, then I might not have. Well, I didn't take a trade, but I might not have even wanted to take that Euro trade if I was going to take it, right? So again, we'll get some more executions on next week with stop losses in place and stuff like that, so you can see how I'd manage those mentally, and how I kind of evaluate, managing the trade in profit, managing the trade in loss. But this would have been a very nice bearish trade, and obviously the precursor to what's going on here. So again, it's about 11 o'clock. I'm probably going to call this session just because I don't really want to sit on here until noon on a Friday. But that's kind of a breakdown of what I would be looking for. So again, you're going to see the checklist is pretty much the same thing. What's the dollar doing? What then I hop to my currencies, right? How are they reacting in relationship to dollar, right? With their natural relationship, are they doing what they're supposed to be doing? Are they doing against what they're supposed to be doing? Are the two assets that I'm looking at, are they moving in the same direction as each other? Are they moving differently? So I'm looking at all those different things, and then usually I'm just narrowing it down based on which one has the best probable setup in relation to what I want to see happen. So some days I'll come on here, go through my check downs, and I'll see Euro has the best opportunity. Some days I'll see the pound does. Some days like NASDAQ will be the best one, right? Yes, right. But they all should be doing what they should be doing in relationship to the dollar and in relationship to the overall bias. So usually it helps to get on the charts about a half hour to an hour before the market, before you want to look to take entries because of that. But NQ honestly played out pretty well too today too. So but yeah, so all these things, I wouldn't say this is pretty decent chart watching session. So again, next week we'll be on time and we'll get some actual entries in. So again, stay locked in the Discord. For those, again, these are probably going to be open to the mentorship group, students only. I typically have, I wanted to hop online because I went viral on Threads today or yesterday, a couple days ago. I posted something. I don't know what happened, but just hella people started hopping in the Discord because of it. I'm not mad at it at all, but yeah. So, but because of that, I wanted to do like an open live session where we just kind of chart watch. So yeah, so I wouldn't actually be surprised just on NASDAQ if we did break structure. I'm always looking at the lower, the high of the day at that point. So if we did continue to reject from this level, then I'd be looking for us to take Asia's low. I'm just not going to stay on and watch that because that might not happen until PM session, and I got better things to do than sit in front of these charts all day. Same thing here. Again, I want to see the market take these lows, and see how it reacts to here. So I'll give it like 5 more minutes, but I'm gonna go on mute. But yeah, if you guys have any questions at all, this, you definitely use this time to drop questions in the chat too. It's not every day you get a chance to have somebody like break down stuff for you live. I know when I first started trading, if I had somebody that comes on like on a call like this and just break down stuff, like I would have a million questions. So take advantage of the time for sure. But I want to go on mute really quick, turn my camera off, but I'm still here. All right, so hopping back on really quickly, you can see here that we did reject from this fair value gap there, and we're heading towards our initial target here, which again I think is going to be the low of the day. So it's one standard deviation level lower than Asia. So again, I want to see if we can get through this. And so when I look at levels like this, I'm always looking at the low of a wick. I'm looking at consequent encroachment of the wick. And I want to see if the market can get through that. And the fact that we just whipped off that, as we were saying. So consequent encroachment is that midpoint of that wick. So I'm measuring basically the high, the middle, and the 50% of all the levels that I'm looking at on the way down. So we're rejecting from this. It just rejected from the consequent encroachment of that wick, this long black wick. And basically how I read consequent encroachment is just like it's 50% of the level of a range, of a specified range. It could be a wick, it could be an order block, it could be a fair value gap. But basically it's a conditional statement, right? So like if we get through this, then it's likely that we're going to get there. And if it's likely we're going to get there, then most likely we're going to take that. So the fact that the market respected this level is kind of telling that maybe we might not get down all the way down there. So if I was in an actual position and I probably would have entered somewhere in this range right here. So let's say this is my initial entry. My stop loss is probably moving my stop to like just above this zone right here. It's like where price is sitting at that 930 level. So I'll just like make a note and say stop loss. So I'm in profit, right, at this point. And really I'm just measuring to see if I'm going to get, if this is my initial take profit level or we're down here. I might even move this a little bit closer just because at one point we'd already been all the way down there. So something like in that range. But my stop is moved into profit. My take profit level will be down here. And I'm just kind of managing this out to see, man, can we make a run back below that level, that consequent encroachment? If not, then cool. I'm just going to take this and run with it. And that's, about 20 points ish, 25 points, which I'm cool with, especially after the market started to reject from that level there. So, yeah, so that's how I would like play that if I was actually in this trade right now. Just again, I'll leave this open for a few minutes, but that's how I would be looking at it. Yeah, I don't like this. So if it was me, I probably would even, continue to move my stop into profit, and I'm okay with it getting taken if it takes that high, right? Um, but at this point, I would have locked in at least 20 something points out of 30. So I'd be okay with me getting my stop loss taken. If it does come up and take that, if it gets me the run, cool. And so when you're in situations like this, the question is like, how much would you actually, I'll just say entry here, but how much would you actually make versus like, am I going to make money or lose money in this trade? It's a different feeling. And so the every trade is not going to go directly to your take profit, but what you can do is maximize your run. It shouldn't be an all or nothing scenario every time you trade. You should be looking to move your take profit, your stop loss to the take profit after it starts to take out lows, form new highs, form new order blocks. And this stop might be a little conservative. Maybe I should have it up there. But if I was actually in this position with money, I mean, and it's a Friday, I just want to walk away profitable. So I'd be okay with it getting taken right there. Again, exercises like this, I know there's no money on the line, right? And I know there's like, it's not the thrill of walking away with like $10,000 in a day, right? Or something like that, or $1,000 a fight, like whatever, right? But exercises like this, being able to like sit there and say, okay, I want to see the market do this, then do this, then do this. Those things help because they make you way more confident in your strategy, and they make it so you get real time access and real time like experience. Again, not every take, just because you set a level as your take profit and it's built on logic and reason doesn't necessarily mean it's always going to get there. But it would be a shame for me not to have a stop loss, right? And then market goes all the way back up to my entry, and I just sat at this computer for 2 hours for nothing after being up 20 points. 20 points for me is usually going to be, I mean, I would probably have at least 3 or 4 contracts on, right? It's like at minimum, maybe closer to 5 to 6, depending on the size of my account. And so like we're talking like at least $1,000, right? And you get to a point as a trader where, especially if you look online and stuff, and you start seeing $1,000, or like people make 30,000 or 40,000 in a day, but $1,000 is $1,000, man. You can sit down at a computer and make $1,000 in a day, and not even a day, in like a morning. It's like $2,000 a day if you were to do a full day. The $10,000 a week, it's the equivalent of making $10,000 in a week, right? And so like you gotta really value money. And one of the biggest problems, and it's a good problem to have, but one of the biggest problems I had when I started being successful as a trader is I would say like my days are only worth it if I walked away with 3 grand or 5 grand or X grand, right? Even if you just walk away making $500, $500 a day is like $2,500 a week on a Monday through Friday job. That's 150 grand a year. Like it doesn't seem like it, but it's just because it's not all at the same time. But you never get to the point where you make numbers like that all at the same time if you just don't be appreciative of the wins that you do get. So, um, so here we're still here. We're still in this again. The reason I have my stop loss here is that it's above these clusters of highs, but then it's also above consequent encroachment. My whole thought process is if we take consequent encroachment, then it's probably likely that we're going to keep running up through this fair value gap. So my stop is a little bit above that high, give it some breathing room. If we close below this, like if we reject from this again, then I'd be looking for the market to, I probably move my stop a little bit closer to that level and then watch it as it keeps going down. But I want to see like a very, very clean rejection. Like give me some bearishness in this candle. Yep, I appreciate your time, Coach. Also, yeah, man, no problem, man. This is just what I love this game, man. To be honest, so I love giving back. I mean, this is a free session. I'm basically opening up to anybody in my YouTube. It's gonna stay on my YouTube, right? I'm actually probably gonna re-upload this. Um, and probably put some commentary around it and actually upload it as an actual YouTube video. Probably title it something like, how to read price better than anybody or something. I don't know, something crazy, right? Um, but there's a lot of value here, and I think a lot of times the value, like people love watching the highlight moments. Like when I was in college, I used to do a lot of network marketing and a lot of direct selling. Like, have you heard of like Amway or Primerica, like those type of companies? And I would watch people in these meetings, those little meetings where they get introduced for the first time, and they'd be really excited at the idea that they'd be rich, and they get so hyped watching other people's stories. But when it was actually time to practice and put work in and work on an elevator pitch and do sales, right? Like they didn't they didn't want to do any of that stuff, and then they wondered why they didn't have the same results as the people that were successful, and they would quit, and they would call it a scam. They'd say it's not working, but really that you didn't work, and so um I had a college coach, a basketball coach, tell me one time that he had this phrase that said nothing works unless you do. And that's still, I mean, not a huge fan of the coach to this day, but like that one thing kind of always stuck with me, like nothing works unless you do. So you got to put the work in. So my stop loss is now here. Got about a minute 55 left in this 5-minute candle. So I want to see, do we close below this fair value gap? And then I'll start looking back at this consequent encroachment zone again. Go over to NASDAQ and see what happened. Yeah, NASDAQ is going to tank. This is going to probably spend the rest of the day going bearish. So I'm not even thinking about that. This was the move. This was the initial trade. Beautiful 80-point move right there. Everything else is kind of... Let me go back over to... Yeah. So this is doing exactly what we want to see. Got a minute left. Are we going to keep rejecting this? And then if so, can we get down here? But I think this is what we want to see. Either way, we're in profit now. If we get a clean rejection from this, then I'm going to move my stop right there, like directly to consequent encroachment, because I don't think we should come back up there. We should, in a perfect world, we had so many rejections from this level, we shouldn't want to come back up here. And if I go down to like a 1-minute time frame, you'll see. Let me do it here. A 1-minute time frame on GBP, you can see that we're getting lower highs here, and the market is respecting levels. So it almost looks like a head and shoulders pattern, kind of, sort of. But actually, it's kind of like a wedge. You can see that. A lot of times when the market is consolidating, it'll form like a wedge pattern, something like this, where the highs will get lower and the lows will get higher. And all it's doing is just trapping volume for the next breakout. Uh, 6P. Go back up to the 5-minute. Okay, so the market closed there. So again, all I'm doing is moving my stop loss now into profit. Again, this is my initial entry up here, stop loss down here. And I really just want to frame my stop loss in an area where I don't think the market should come back up and get. It shouldn't want to come back up to this level here. And if it does, cool. I just got a little bit more money than I did a second ago by moving it down. So again, now the game is no longer how much money am I going to make. I'm sorry. It's not if I'm going to make money today. It's how much money am I going to make? And the only thing you need to watch mentally, and this is from experience, is if the market comes up and takes your stop loss and then immediately goes down, how does that mess with your mind psychologically, right? And how do you feel the urge to want to get back in when it takes your trade, which you just made money on, right? And then it keeps running back down. Those are things that you want to note, because those are the only things that you can really answer for yourself. But you got to measure those things, because that clears FOMO, that clears out the revenge trading stuff. So because a lot of times, I've been in scenarios where I made money for the day, price will come up and take that level right there, and then immediately drop down to where I thought it was going to go.
and I'm chasing it. I'm trying to chase it, and then I end up giving money back on the way down because it maybe it comes down here and runs up and then knocks out my new entry or something like that, and I just gave some money back. So that's the things that you need to take note of and journal. Like, how do I feel when I'm taking this trade? How do I revenge trade? And like, what's the symptoms of me revenge trading? Well, I guess revenge trading is the symptom, but I guess what's the what's the reason? Like, why am I chasing this trade? And what does that look like for me? Because you got to know those things because it's going to trigger you, right? So you're going to get triggered emotionally all the time when you trade, and if you react emotionally, you're going to blow your account, right? The strategy is not a hard thing to do, but boom, and that would be it right there. So we came back up, took that. It would have taken me out of the trade right there. We would have called it a day. I walk away with some money. You guys obviously see that, so that's cool. And it's just basically saying that we didn't get down to where we thought we were going to get. So that would have been the trade. Again, that's how I would look at things based on everything that happened today, using dollar as an analysis, using the intermarket relationships between euro and GBP, right? All that stuff. So, but yeah, what I was saying is that you got to use your psychology as your emotions as a barometer to see like what your issues are mentally as a trader. So I'm gonna go ahead and call it. I don't really care what happens next. Once my trade gets taken, that's it for the day because I'm not gonna enter into a trade here if it starts going down. Like, it's just exactly what I said. So I'm gonna call it a day. Hopefully this is kind of like good for you guys. But again, this is a practice. This is basically how to do tape reading and how I spend a lot of time like learning how to trade without having any money on. Because even sometimes a demo account can like really mess with your head because you get so focused on just trying to make the money to show the people that you can actually do it or show yourself that you can do it that you kind of forget to look at price action itself. And you're all these little things that you're studying and noticing in price. It gets 10 times easier to notice them when they're not there, and your learning curve gets sped up like crazy. Um, so yeah, so I'm gonna go ahead and end this. I actually probably gonna do. This video might not live on my page, but I'm gonna probably download it and have more content and probably re-upload it as an actual video, and we'll go from there. But hopefully you guys enjoyed this. Peace. Have a good weekend. See y'all next week.